Today, we're joined by our friend Peter Grandich, and he has something very important to say. And he wants to say it to this guy over my right hand shoulder, the gold bear who was recently unblindfolded when gold hit $2,500. Peter, what is it you want to say to that bear?
I told you we get you. You know, Ronnie, in all seriousness, there are some people I like in the business, and there's a handful that I love, and you're one of the guys that I love. You do this out of love first.
Yeah.
And there's always going to be a few naysayers, and they can say stuff. And you and I, when we met, I think gold was under 2,000. As you know, 3 years ago, I was so bullish that I said sell stocks and bonds to old gold. So getting to that 2,500, and actually it hit my target of 2,536, which I've had for 3 years. It's nice to see it with his blinds off.
Yeah. Yeah.
And
Yeah.
a little guy behind you is going to be a challenge for $85 silver. But I feel very confident that we're going to get to 50. So I don't know if we'll be taking his blind off. I will tell you this, Ronnie. If we have $85 silver,
Yeah.
and what's happening in the world, I don't know if I want to be living in it, buddy.
It'll be interesting. And gold and silver have been on a tear, right? I mean, I think, like you said, when you and I first met, gold was under $2,000. Obviously, now we've reached this $2,500 milestone. Can you, for the benefit of my audience or our audience right now, Peter, are we to expect some pullbacks? What are your general thoughts as we look out maybe through the end of the year and into next year?
Yeah, so when we hit our target about a week or so ago, I talked about a much needed and desirable, although markets a lot of times don't do what we think is best for them, Ronnie, but I felt a corrective consolidation phase now for several weeks in the gold market, with maybe a worst case scenario of 2350. There's tremendous support at that level, and trading to the highs, approaching 2,600 would be really healthy going into the BRIC meetings. As you know, and I don't want to sidestep, but it's important. To me, the BRICS is a huge, major impactor. For starters, I think gold only got the 2,500 because central banks became major buyers, and they became major buyers because they recognize what's happening on the world stage, and they also recognize that gold is going to play a major role in the new way that many countries throughout the world are going to trade. I'll say it again. I believe that, and I said this a year ago, so I said the 3 to 5 years from there, when the BRICS are all said and done, what they will have done to world commerce will rival what the Industrial Revolution did to world commerce. And gold's going to be a significant part of it. So it's when you have such a move that we've had in the price, it's okay to consolidate. There's nothing wrong with that. But keep this in mind, Ronnie, and this will play into it will get down to where you and I like to play our playground. The majors are now going to be in their second quarter where they're looking at $2,500 gold and a total cost hundreds of dollars below that. So the free cash flow that this is going to generate, even if we just sit here, forget about going higher, is really going to make the majors stronger and stronger. And that will filter down to emerging producers and the junior resource market.
Yeah, it's interesting. I was reading this morning, Peter, an article on Kitco, which said, yes, of course, we all know the central banks, and I consider the central banks to be the most sophisticated investors in the world. Like they're kind of the insiders. They pull a lot of the strings. But now we're starting to see bullish positioning in the metals by the hedge funds. And it got me thinking, like, is this a four-step process where it starts with the central banks, the hedge funds, who are probably the next most sophisticated investors, are starting to get into the metals. And then is it the general investor, the third step, and the fourth step? Could that be the masses, right? The taxi cab drivers. Any thoughts on that?
Well, first of all, we're going to be selling when the taxi cab guy is
Yeah.
showing, but we're far still from there. So let's go back a couple of years, Ronnie. This is important. The Bank of International Settlements, in a sense, the clearinghouse for central banks, the central bank's central bank, made a change a few years back and upgraded gold to a tier one investment to join bonds. Why they do that? Well, at that same time, dozens of countries began a repatriation of their gold from the United States back to their country. Why? Then on top of that, record amounts of purchasing of central banks. So remember, not too many years ago, 15 or so, they were big sellers of gold. They're not doing this for a trade, Ronnie. They're not speculating. They're doing it because they foresee the change that is coming. The handwriting is on the wall to them. And on top of that, Ron, gold has now outperformed bonds.
Mhm.
Ron, I'm in my fifth decade of being in the financial service industry. I remember from my first day in 84, a sales manager would say, yeah, the stock market is somewhat risky, but if you want safety, you put your people in the bond market. Well, gold has outperformed that. And so it's not a surprise that we've seen that. It's not a surprise that we've seen the hedge funds recognizing that. And remind you, this is still not something that's on the average investor's mind. You know that I'm part of a major planning group here that we deal with US clients and businesses. Still, Ronnie, not 1 out of 10 people that come in with to show us a portfolio have any real representation towards gold, especially physical bullion. A couple may have a couple mining stocks. And so we still have a long ways to go in the cycle of ownership. And you were very thorough in your question. All right, central banks for buyers. Now the hedge funds are coming to buy. The next thing will be the major institutions and big players. And then finally, when the public shows up and the public starts talking to you about some junior resource stock when you're getting your hair cut or getting in an Uber car, maybe then we're sellers, but not before.
Not before that. And I also read yesterday that gold is now the second most popular reserve asset in the world. I think it surpassed the euro, which had been at number two. And I heard someone say something that I'd never thought of, Peter, and that is that if you're a central bank somewhere in the world at this point, you basically have two options. It's either the dollar or gold. And there's really no other option out there. You mean people aren't necessarily going to put the reserve assets into the Russian ruble or the Chinese yuan, that it's really become a battleground between the dollar and gold. If you're looking to buy gold, silver, or platinum, do yourself a favor and check out Pimbex, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pimbex is best, and you will too. And be sure to tell them that you're from Ron's Basement.
What's real interesting is, and this will, when this gets circulated, I'll get my usual hate emails from the absolute cult of all cults. They call it Bitcoin, I call it Bitcoin. The audacity, and I've seen some very smart money managers, one in particular that I think of, who's a big believer in Bitcoin, to talk about it as a reserve currency. First of all, you can't have a reserve currency that has swings of 10, 20, 30% in a day, let alone go up and down year after year. That isn't a reserve currency. You can't be dependent on that. So that's just hogwash that someday is going to be made into a reserve currency. It's the most hyped. It is so hyped that tulips and Bernie Madoff in hell must be jealous. I mean, I've never seen, just an exorbitant amount, just always going to now. Some people are talking about a $5 billion price. I mean, it's just insane. But that group will be the group that will come later into this when they realize, and look at the last 2 years, where really what has transpired. When this talk, remember 2-3 years ago, gold's a relic. That's used to hear from a Bitcoiner. Bitcoin's the new gold. How many times did you hear that? Well, what's gone up? Bitcoin has gone nowhere. In fact, it's in a just major distribution pattern, and gold has gone from 1700 to 2500. I'll just say that the central banks recognize that they're not going to load up on Bitcoin. That's why they've been loading up on gold. And this fall, I suspect, because they've already kind of put it out in drips and drabs, we're going to see that they have a major plan on how they're going to eventually trade among themselves, which is going to include a unit, and that unit is going to be as much as 40% gold. So I'm extremely bullish still, even though We need a corrective, and it's healthy. I know
Yeah.
people want to see something go straight up. We'd be better off of 2, 3 months of sideways action here than going up to 2650 or 2700 now and then setting up for a major fall. So I'm okay with the gold price where it is. And if it stays here for several weeks, I don't have a problem with that.
Okay. Thank you. Thank you. So my next question will come in two parts, Peter. We know that there are challenges in the U.S. economy right now. We know that we could be seeing some challenging times ahead here in the United States. You talk about this idea of people building a financial ark. You know, Moses built an ark to deal with what was an oncoming calamity, to save himself and the animals and everything else.
I think you meant Noah.
Noah, what did I say? Moses?
Moses.
I did say Moses.
Moses just did a small thing. He parted the Red Sea, but that's okay. Go ahead.
I'm in big trouble, Peter, because I went to Catholic grade school, high school, and college. So Noah, that's right, Noah built the ark to avoid the calamity. Um, what do you see happening? You know, since we'll stay on the boat analogy, it feels like to me the U.S. economy is similar to the Titanic, right? When the Titanic sunk, there were people on board who kept partying away, saying, "Oh, everything's great, as the boat was slowly sinking. Is it an appropriate time for people to be doing what Noah did, which is build an ark?
Well, I will never begin to think that I am been been blessed that God blessed Noah to give him the information to build his ark. But I am certain even Noah, when he started building that ark, the weather was sunny and 80 degrees. And like I've heard from a lot of people who laugh at the thought of me building this financial ark, going, "Hey, idiot, what are you doing that for?" I'm certain Noah heard that too. The premise is, and you've been very kind to say the word challenging. If it was just challenging, I wouldn't be so worrisome, but there are a lot of life and death things happening. So there's 5 key ones for me, and I'll just name them. And if you want to discuss any of them, that's fine, Ronnie. The first and the biggest and remains is the deficit and debt. I just don't think people understand what $35 trillion is. And there's not even a chance that there could ever be a major principal payment back of that, let alone see it paid back. But the problem now is we're getting multi-trillion-dollar yearly deficits. Listen, in 4 years, the debt increased by $11 trillion. Now, that helped the stock market because there's money swashing around and all. But eventually, if you keep putting on too much weight, you get sick from the weight. And that's where we're at now. So the biggest concern is, are we going to be able to make interest payments when the Congressional Budget Office, who's now up their target to $54 trillion by 2034, the debt, and in their forecast, Ron, they don't have any major recession in it. So if there's a recession or two within those period, the debt's going to come up higher or become more abundant faster. So how do you pay interest on that when 65% of the public is working paycheck to paycheck? Go ahead, Ron, you have something.
Well, yeah, because I have a degree in accounting, so I follow that closely. I agree with you 150% or 130%, which is now our debt to GDP ratio in this country. But I think it's important also to point out that that with interest rates having gone up, the interest expense is becoming increasingly higher, and that higher interest expense then gets fed back into the overall national debt, which, like you said, is also, from another perspective, being increased because of the deficits. And somebody pointed this out to me the other day. I'd never thought about this, but that debt is increasing at a compound level, right? I mean, it's just like when on the other side of the equation, if you invest money and you grow your money on a compound basis, well, that debt level is also increasing on a compound level, right?
So think of this, Ronnie, at 50 trillion and a 5% interest rate, which is not a lot, because eventually you have to refinance this debt. You can't pay it off. So you have to keep borrowing, in a sense, a Ponzi scheme to pay the old debt. That's $2.5 trillion in an interest expense. Ron, our best year ever as a government was 5,300,000,000,000 in income. So let's just say that gets up to 6 trillion. almost half of the interest that is going to go to pay the interest expense. So how does the government operate on the remaining part? It can't. So one thing is for certain, taxes are going to go up a lot, and the ability to service and provide the services that government has been producing. And here's what really drives people when I speak to them, they're so shocked. I said, remember now, you may either, if I'm talking to seniors, you're expecting your Medicare coverage, you're expecting your Social Security check. Hey, folks, that's not in that number. They still have to come up with to pay those services. They have to borrow for that to do it.
Yeah.
It's not sitting in a bank somewhere where they pull it all. Then, Ronnie, let's throw this out before we even get to the other four. You got state debt. Think about the people in California. How are they going to balance that budget? I can't wait to see that trick. Then you have corporate debt. And then you have consumer debt, which just continues to rise. Do you know the bottom 50% of earners, the bottom half of earners in the United States right now, almost 50% of them now are using credit cards just to pay for food, just to pay for rent, just to pay for gas. That's basically 1 out of 5 people right now. Talk to anybody that runs a food bank. They'll tell you they tripled or quadrupled the number of people showing up, and the people of earnings of income have increased dramatically or showing up. We haven't even got to number 2, which is retirement and aging crisis. Number 3, the immigration issue. Number 4, the BRICS, which we briefly discussed. And number 5, and that's probably the most important one to discuss, Ron, because this is where everybody's going to turn to when one or more of these problems become acute and apparent to everybody. Political paralysis in our country right now. Mm-hmm. Ronnie, the Democrats and Republicans, and I don't care which one you are, they can't even go in a room together right now. Mm-hmm. And the division that is between them now is as bad as it probably was going into our Civil War. And what's compounding that issue is each party has a fragmentation happening. For the Democrats, they're moving more left. And for the Republicans, there's a segment that's moving more right. And political paralysis at a time when eventually they're going to have to deal with them. Because all people are going to do is turn to government and say, you got to fix this. Whether you suffered because of the debt crisis, whether your retirement, you can't retire, you can't get good housing, the immigration, which no one wants to talk about. Because remember, every day, more and more people are coming in. And all those people coming in, Ronnie, the vast majority coming just with their clothes on their back. So for quite a while, they're going to be a liability. I'm not talking about them becoming voters for Democrats. I'm not talking about terrorists. I'm not talking about crime. The simple fact is the masses of those people, many who are coming just for a better life from where they left, are a liability. They're not an asset. And throw that on to the logs of fires of you and I know we haven't even talked about the crime issue, unfunded pensions. We can go on and on and on and on. And all of those things are getting worse, not better.
Yeah, it just doesn't seem to work. And if I step back to point number 1 that you made, the math just doesn't work. And maybe the only way it works is by a significant dilution in the value of the U.S. dollar. I mean, which is kind of what feels like they've done over the last several decades, continue to, print money and create money out of nowhere. But at the end of the day, I guess on paper that may work, but in real terms, I think it just feels inevitable that the American public is really asleep to what they might be facing. I mean, I think and I know, and if we're even half right, the general American public, I think, is going to be in for some serious shocks in the coming 10 or 20 years. I hope I'm wrong, but
well,
Fortuna Mining is a global intermediate gold and silver producer. Since 2005, Fortuna's best-in-class management has delivered impressive growth and profits. Fortuna's solid financial position and operational expertise allows for performance in any precious metals price cycle, but also provides a foundation from which to harvest robust profits in more favorable metals markets. Investing in Fortuna is an investment in quality, long-term, sustainable production of in-demand precious and base metals.
It's going to be much sooner than that. And forgive me, Lord, for what I'm about to say. Can't believe I'm saying it, Ron. Mm-hmm. The Democrats are actually right that you have to raise taxes.
Yeah.
they believe it or not, we are going to see, if not in this election, we will see in our time taxing unrealized capital gains. We're going to see taxes probably eventually on insurance, which right now passes tax-free. When they look and see that, my God, $1 trillion is going to pass from this generation to the next because they have insurance policies, we got to attack that. All these things are coming, and on a state level and on a local level. And it's all because of sins that both sides have committed for decades. Ronnie,
Yeah.
when I entered the business 40 years ago, we never used the word trillion for anything because there wasn't no need to. There was no $1 trillion deficit. There was no trillion this or that. And let's face facts. What took 200 and something years to get to, the past couple of governments in 10 years surpassed all of that. I mean, we basically have doubled since Obama became president, the level of debt. It's unsustainable. You're in a Cassie, you understand that.
Yeah.
The public don't understand that. We cannot continue at this route. And we're shortening the lifespan of how long that can continue before it breaks. And it's just an amazing phenomena that the vast majority of financial service people, the people who you would think should have an idea about this, have no real concept about this and don't understand or can't explain when I ask them, how do we service this debt? How could you keep expecting the government to have the lights on, to have the roads working, to have a military and everything, when over half of our money is going to pay just interest on?
Yeah, yeah. Well, it makes me think of a saying my mom used to share with me when I would do something wrong. She would say, "You made your bed, now you get to sleep in it," or "The hens eventually come home to roost." And I agree with you. It's hard to put it into words, but from an analysis perspective, the situation is getting increasingly more dire, and it's happening at a faster and faster pace. I mean, it's just I feel like the sky is falling, but it's just really the reality of what's happening right now.
And we're not alone in this, Ronnie. When we look north to our great neighbors to the north, still two big trading partners. Canada has a lot of similar issues. Look at Japan. Look what's happening right now
Yeah.
because of that debt. Even in China, because of their real estate exposure. You know, if I may, and I know with you, you will at least allow me, I don't incorporate my spiritual life too much into my secular work. But whether you look at the Holy Bible as the Word of God or just a bunch of people that got together and made up a lot of crap, or somewhere's in between, one thing that's evident throughout that book, there's not a positive verse about debt. In fact, there's dramatic warnings about debt. And to me, that book alone demonstrates that debt is the dirtiest four-letter word in our life.
Mm-hmm.
And it's been going on for a long time. Our parents and grandparents, they never needed all the stuff that everybody that we had. We had smaller dwellings. There were no public storage facilities. Three generations
Yeah.
of families lived together. They weren't living in some assisted living place or what have you. And all of these things in a generation or two has led us to a brink. And that brink is a lot closer than most people even realize.
Yeah, yeah, yeah. I made a video the other day where I talked about how to be rich, and I said, well, basically, the first thing you need to do is get yourself out of debt. Unless you're using debt to start a business or make some type of, let's say apartment bill, whatever. I don't like debt, period. But get yourself out of debt and then spend. This is a foreign concept. Spend less than you earn. And then with that excess capital, you can make some investments, right? Gold or silver, whatever you want to do. And I think a lot of people are mistaken. They think that just buying more and more stuff on credit cards is going to make them happier and happier. And I don't think that really works. I think people would find that if they actually that you can live just as well a little bit below what you're earning, and that freedom that you get when you're out of debt is worth way more than the latest and greatest iPhone or whatever the case may be.
So our motto in my planning group, and I've lived it for half of my career. First half, I was like everybody else. Less is more.
Mm-hmm.
I could have a bigger dwelling, but I'd have to extend myself. I could have a fancier car. I'd have to extend myself. What's lost in that is not only the financial end, and as an accountant, you'd appreciate that. But one thing the financial service is horrible at, and I was horrible at it for myself and in the first part of my career, and that is not appreciating mental anguish. Now, we have learned mental anguish because we own junior resource stocks, but in a serious manner,
Yeah.
putting your household in order, like you said, spend only what you have, not what you can borrow against. Live within a means. What I hear from everybody that ever listened to me in the last 20 years that reduced debt or eliminated, not one person came and said, boy, that was a big mistake. Life has really turned bad ever since I did that. No, you hear the opposite. And we as a country and have lived that way for a generation. And as if there's no penalty to pay for it. And that penalty is very, very close now. It's within almost everybody that's watching this, Ron's lifespan and lifetime that we're going to see those dark days.
Mm-hmm. Mm-hmm. We talked earlier about your concept of building this ark like Noah did. Is that the ark, getting yourself out of debt, living a
Yeah,
little bit below your
yeah.
means, being
Capital preservation is
yeah.
now more important than capital appreciation, Ron. We had a lot of easier markets. You know, all this, again, because of COVID, we put $7 trillion into the economy. Of course, the stock market went up. It people forget that the original QE, going back to the previous financial crisis, the 2008 mortgage crisis. Remember when Ben Bernanke and Obama stood there and they created QE1? What
Mhm.
was it supposed to be used for? We're going to put it into infrastructure, rebuild America, and that'll get us out of it. The money never made it to Main Street, Ron. It stayed mostly in Wall Street. All the money that was given to the banks and so forth. And then QE2 came and three, and we've been living this ability to think that every time there's an issue, the Fed steps in, the Fed put, as it's commonly known, and turns things around. We've run out of that. We can't add another 5 or 10 or 15 trillion in another crisis. And believe it or not, they will do that when all the pressures come. That's why anybody thinks inflation is dead, or even if the current inflation numbers are correct, which I don't believe they are. I think inflation's a lot higher than we're told, just as the employment was a lot less than we were being told. But we are within now reach of that very danger zone. This is not something that's still 10 or 20 or 30 years off that we shouldn't. So I think preparing for it now, come less dependent on government, more self-sufficient, positive cash flow, live within your means, and recognize that with all this extra stuff that now exists, think about when you were a child. You played with sticks and maybe you got a little rubber ball and somebody took a broomstick and you played a game. Now kids have to spend hundreds, if not thousands of dollars on things that they look at and play through on their machine. There's no innovation happening. And what did all that stuff do? Didn't make us any happier. Every mental study shows we're more of a mess now than we've ever been. You know, there's only two types of people in the world, Ronnie. Those who are a mess and know it, and that's a blessing, or those who are a mess and don't know it or don't want to know it. The blessing is to know you're a mess and
Yeah.
to recognize that now before it's too late and to become leaner and meaner, so to speak. And I don't mean mean in a vicious way, but just be healthier. Again, I've never yet met anybody that repaired their lifestyle and lessened the debt and the burden. Look, there was a number you talk about reading on Kiko. A number came out the other day that almost half the people now are not putting any money towards retirement because they need it to sustain life right now. And they are forestalling that problem, but what's going to happen when they come to retirement? They're not going to live that beautiful commercial that the financial service they'll run, that you just come to us and you get to swim and play golf and live in this beautiful community for the rest of your natural life. And all these things are coming to a point that are much closer now and that most people will be impacted by.
Yeah. Yeah. The hens will come home to roost. And when I think about, and you touched on this, I think when the Fed or the government is faced with this decision, when things really start happening, I think they'll be faced with the decision of, do we let the system implode? Do we let the economy implode, or do we print more money and try to kick the can? But the can is, and I want to get your thoughts on this, and I know we're running long, so I want to maybe just get a few more minutes of your time. But the can, maybe back during the tech bubble burst was a empty beer can. Then it became a empty paint can the next time, and then maybe during the GFC it became like a 5 gallon bucket, and during the COVID crisis it became a bigger bucket. But now it feels like the can is becoming like one of those 55 gallon steel drums. They can't kick the can far enough, and it's going to take much more effort, much more printing to kick this can. And it's scary to think what can happen. And I'll tie that back to something else you said, which is inflation. Right? I think Americans are unprepared. I think it's just impossible that we don't see further waves of inflation hit us as the value, right? I mean, because inflation by definition, I would think is the value of our dollar going down in value. And I can't imagine a scenario where in real terms, right, not this DXY, prettiest horse at the horse factory type thing, but in real terms where the dollar doesn't continue to lose value.
First Mining Gold is a development company advancing two of the largest gold projects in Canada. Springpole in Ontario and Duparquet, located in Quebec, each already has 5 million ounces of gold reserves, but exploration initiatives are underway at both projects to find even more gold. First Mining is well financed, has zero debt, and owns an interest in 4 additional Canadian gold development projects.
Let me close with this, Ronnie. And again, it goes back to, because I really, really like you and the work that you do and your honesty and the emotion that you tie into your work. So you and I are meeting 20 years ago. We're having lunch.
Yeah.
Something, we know each other the way we know each other. And I say, hey, Ronnie, did you hear about this country down in South America and all? She go, what's that? Yeah, the guy that was once president, who they impeached twice while he was president. And as soon as he was out, they started charging him with all these criminal charges. In fact, they found him guilty on one of them. And then as he started to run again, he was almost killed by an assassin. And the other side of that, the guy that was president, that some people question about how he became president and wasn't fair and all. And then throughout his presidency, his family and all were charged with all sorts of criminal actions. And then he gets duly elected to be the next nominee for his party, only to, in a sense, a coup to happen. And they replace this other person in with him and all. And you would go to me, Pete, what South American country are you talking about? And now I have to tell you that South American country, or third world country, is the United States. Yeah. It's a banana republic. And seriously, what did those banana republics do when it came to their money issues? They printed money until it became so cheap, highly inflationary. And that's the road America is going down. Yeah. It is the 21st century issue comparison to what a banana republic was, that those of us that were around and remember what it was like in the 70s into the 80s for a lot of those third world countries, that's what we become.
Yeah. Yeah. Well, it's going to be an interesting ride. Peter, at the beginning of our talk, you said some very nice complimentary things to me. And I want my audience to know that I hold Peter in the highest of regard. You have a lot of knowledge, but you also have a lot of courage to speak your truth and the way you see things. And I think a great example of that is when you talk about the current political situation or the situation of the country. I don't feel this like heavy bias towards one way, like you are doing your best, and you may lean one way or the other, but you're doing your best to look at it from an objective manner and to kind of share with people what you see. So I do hold Peter in the highest regard, and that's just one reason why.
Well, Ronnie, I'll super close with this. There's only 2 types of advisors in the world. There really are. Those who say what they think, or those who say what they think you want to hear and it sells. Yeah. I've always been in the former. I've never been part of the latter. I've been a contrarian by nature, and I've been super objective, and quite frankly, sometimes too much so, because I tie my faith into my work, and that does pee off some people. But I remember what Mark Twain said. He said, if you always tell the truth, you never have to remember what you said. And when you get old, you have trouble remembering what you said. So it's more important now to be like Mark Twain than ever.
Yeah, yeah. Well, Peter, you put out a blog post on a daily, almost daily basis, which I enjoy getting. If people want to learn more about you, they go to petergrandich.com. Is that correct?
PeterGrandich.com will tell you the whole history. There's a blog there. A lot of my commentary now is on X/Twitter. And of course, I still do YouTube interviews like this. I'm blessed by people like you who are trying to do the right thing in a world where there's not a lot of right things done in the financial service industry, Ronnie. So the mutual love fest that we have for each other is real. And it was easy to say to that bear, his blind is off. It's going to be a challenge to get to that guy there, but I wouldn't be surprised before we see our last breath that we're taking off his blind too, Ron.
The $85 silver blindfold will come off. Absolutely, Peter. Thank you on behalf of myself and our viewer, who I know has learned a lot. Don't forget, guys, go to petergrandich.com. You can sign up to get the daily email blog post. And Peter, we'll look forward to seeing you next time.
Thank you very much, Ronnie. God bless for all the good work that you're doing, buddy.